MCX IPF presents Commodities Trade.
Backwardation in commodities has hit the steepest level in 15 years recently, driven by the worldwide shortage of raw materials, led also by massive stimulus, low interest rates and recovery post-pandemic in many consumer countries. So metals to agri-commodities, all is in an uptrend in the near term, with many commodities at or near all-time highs. There are three important terms to understanding backwardation. The spot prices indicate the current prices at which you can buy a commodity, while a future price is an agreement to buy or sell at a specified delivery in future for which the maturity could be in next month or 3 months or next year. And the third is the futures curve, which illustrates relationship between the spot and the future prices. A future curve is in backwardation when the slope is declining, predicting lower prices in the future. This backwardation can be short-term, led by bottlenecks that will soon be eased, like the Suez Canal disruption or the Colonial Pipeline shutdown in US that led to gas prices at the highest in 6 years. Or it can be long-term, where the supply and demand imbalances persist for months or even years. When you put all of that in the current scheme of things, we are faced with short-term scarcity. So the suppliers have hiked prices of commodities. But do keep in mind that the future contracts will have storage and carrying cost in addition to other fundamentals added to those prices. So scenario one is that the production may be ramped up and the future prices will be lower. Remember the crude scenario in 2020 when it went to the negative, that's an example for that. Scenario two is that while spot prices are higher, futures will also rise, resulting in inflation. To make use of backwardation, investors and funds continue to roll over to the next month as it is cheaper and thereby making profits, signaling continued bullishness into that commodity price. Another scenario is when the future curve shows no significant discount. That reflects that the market expectation of a higher price is going ahead for a longer duration. But if the future prices are higher than the spot, then this is an exact opposite situation of backwardation, and that is called contango.
MCX IPF presents Commodities Trade.
Brought to you by MCX IPF.